Welcome to Return My Capital. It's always a good day when you get a dividend distribution from one of your holdings, and that is the case for me today. VXUS just paid out dividends, but it was a little bit underwhelming. It wasn't quite as much of a dividend distribution as I was expecting. So we're going to take a look at what's going on with that. Let's go ahead and dig in here. We're going to start out by looking on Vanguard's actual investor relations page here. So again, Vanguard Total International Stock ETF. It's the most popular internationally focused ETF, and the ticker on it is VXUS. It's got a fantastic expense ratio of 0.05%, which is extremely attractive, especially when we actually look at some of its comparative funds, some of its peers. You'll see why that expense ratio is so attractive. You'll see the risk-reward scale here does list it as more risky. We'll see why that is. Shifting down to the portfolio composition. So this actually holds nearly 8,600 companies. And that's really why so many investors are attracted to a fund like this, because you get very, very broad international exposure. International from the perspective of a US-based investor, but you are getting exposure to almost 8,600 companies via a vehicle that carries only a 0.05% expense ratio, which is what is so attractive about this fund. Price to earnings ratio, 15.6. So slightly less expensive, if you will, than say a VU or a VTI that is entirely focused on US-based companies. In terms of allocation, so you'll see here, emerging markets make up 26.5% of VXUS. European companies, just over 40%. Companies based out of the Pacific region, so primarily China and India, and I'm sure others, maybe Vietnam, Indonesia, etc., Japan, Australia, is 25%. The Middle East, just 0.6%, and North America, 7.5%, so Canada and Mexico. Moving on down here, you'll see the top 10 holdings, and really I went through the holdings list for about the top 100 or so companies in VXUS. I'm not going to go through all 4,600, sorry. But up top, you'll see a lot of names that you'll recognize, right? The top holding is Taiwan Semi, and that makes up 2.2% of the fund. And then the only other company that carries even a 1% weighting is Tencent, obviously Chinese internet giant over there. You've got SAP, Alibaba, Novo Nordisk, very large pharmaceutical company based out of, I know Europe. You'll have to leave me a comment in that section for which company Novo Nordisk is based out of. Is that Sweden? Let me know. ASML, a chip giant, Nestle, obviously your sweets, your consumer goods. Roche, AstraZeneca, Novartis. I believe both AstraZeneca and Novartis are also involved in the pharmaceutical space based out of Europe. So that's your top 10 holdings. But you see, because there are so many companies contained within this ETF, even your 10th holding in this ETF is only 0.66% of this fund. And, while that broad diversification is great, it can also lead to underperformance, but we'll get into all that. You see holdings 11 through 20 here. Again, massive companies, but because of the amount of holdings in this ETF, carry a very, very small percentage weighting of the fund. Just to call out a couple names, you've got Toyota, Shell, Samsung, LVMH, the consumer discretionary giant of your higher end goods. You've got Siemens, Royal Bank of Canada, probably the largest Australian bank, Mitsubishi, Sony. And then we'll just do 21 through 30 here. You've got Unilever, Shopify. Let's see, who else do we have? Sanofi, Total Energies, Hitachi. So, giant companies. But by the time we get to this range here of the 21 to 30 or so holding in this ETF, we're talking about 1/3% in terms of total composition for the portfolio. Now, I mentioned the dividend that was just paid out, I guess, yesterday. Just received it in the brokerage account today, the 26th. You'll see here that 19.1 cents per share was just paid out. And compared to the Q4 2024 distribution of just over $1 a share, That obviously was a bit of a surprise and a bit underwhelming, but you'll see that the distribution is actually very cyclical on a quarterly basis and a little bit difficult to project. So just going back to last year, the Q1 dividend in 2024 was 22 cents. Compare that to the Q1 dividend here in 2025 of 19 cents. So even year over year, that's several percentage points down, probably double-digit percentage decrease. Dividend distributions for Q4 of 24, again, was $1. I believe that was an all-time high for a quarterly distribution for VXUS. Q3 in 24 was 27 cents, and Q2 was 48 cents. So highly cyclical dividend distribution here for VXUS. Let's take that and look a little bit further. So here you're seeing the historical yield for VXUS. You see, it's fairly steady, especially going back to the beginning of 2023, where you'll see that it was yielding 3% January of 23. Now here in March of 25, we're looking at a 3.1% yield. If you kick back into 2022, you see a yield as high as 4.2% and 4.2% as well. So, certainly that would have been an attractive entry point from a yield perspective. You'll see some projected dividend ranges here for the remaining 3 quarters in 2025, as well as all 4 quarters of 2026. I would take these projections with a large, let's say several grains of salt, because as you see here, the percentage change on a year-over-year basis, quarter-to-quarter basis, it's all over the place. You've got 81% decrease from the previous dividend here. So Q1 25 compared to Q4 24. Percentage change year over year. So I mentioned this earlier. Q1 here of 25 is almost 15% lower than Q1 in 24. So it's not going to be that steady, predictable income vehicle as you might appreciate from other dividend ETFs. Let's take a look as it compares to some peers. And not just peers, but kind of a broad array of ETFs here. So this is just a chart showing the volatility as it relates to the forward dividend yield. So you see VXUS here is going to be considered slightly less volatile and slightly higher yield than, let's say, the VEA, which is the Developed Markets ETF. So that's how it would compare to something like that. Now, VXUS compared to a VIG, which is the Vanguard Dividend Growth ETF focused on United States-based companies, higher yield, right? So we've got a forward yield of 3.1% on VXUS compared to a 1.7% yield on VIG. However, VIG, the historical volatility, is an 11.1 compared to a VXUS at 13.1. As it would relate to a VU or a VTI, you'll see those down here as well as the SPY. So again, significantly lower yields than a VXUS of a 3.1%. As it relates to VTI, just 1.3%. But again, significantly lower yield, slightly higher volatility. Compare it to something fairly unrelated to a dividend-focused ETF of VUG, just a 0.5% dividend yield, significantly higher volatility, but we can actually compare historical returns, at least over, let's say, the last decade here in just a moment. I like to show this. So when we talk about a cyclical dividend, you will see some trends, right? So the Q4 24 dividend was $1. The Q4 23 dividend was 85 cents. And the Q4 21 dividend was 94 cents, right? So you're seeing consistently these Q4 dividend distributions with VXUS being of the highest. And, that's consistent, but you don't see any upward trends, some steady slope here with those distributions. So again, hard to predict, hard to know what's going to be delivered to you as an owner of this ETF. Looking here very quickly at Seeking Alpha, we see over the past year, shares are up about 5%. It's actually been performing year to date even better than the US-based market. It's up 7% year to date. However, over the last 5 years, and especially over the last, let's say, 2 to 3 years, it's kind of trading sideways. We're up 50% over the past 5 years, but only 23% over the last 10 years. You'll see it's currently trading towards the higher end of the 52-week range. ETF grades on this are all favorable. It's an extremely low expense, high liquidity investment. And here you'll see the returns as they compare to the S&P 500. So let's look over the past 5 years. For the total return of VXUS, you're looking at 80%. Again, that's with dividends included. But past 5 years, total return of the S&P 500, 152%. You extrapolate that out over 10 years, the picture gets even darker here for VXUS. But again, if you're seeking international exposure because you don't expect the trend of domestic US outperformance to continue, then that may be reason enough to hold an ETF like this. But 69% total return over the 10-year for VXUS compared to 235% for the S&P 500. You'll see a sector breakdown here for VXUS, 22% in financials, 15% industrials, 13.5% technology, 11% consumer cyclical, almost 9% healthcare, 7% for materials, 6% for consumer defensive, 6% for communication, almost 5% for energy, 3% in real estate, and 3% in utilities. Again, you'll see those top 10 holdings that we already covered there. You'll see the ex-dividend date, which was March 21st, the payout date being the 25th. Just a 3.5% 5-year growth rate on that dividend, the 5-year CAGR. So again, inconsistent growth. You'll see it here with the dividend growth history. It's a little fluctuating, a little all over the place. So that's kind of what you've come to expect now with VXUS as we've gone through this. We'll take a look very quickly as it relates to some of its peers. Now, these are additional ETFs that are focused on the international markets, whether that be more of the developed markets in, say, Europe and Asia, or developing markets, whatever the case is. Really, the one thing I want to call out is the expense ratio. So this is why so many investors are drawn to VXUS with the 0.05% expense ratio and over 450 billion AUM. Now, as you see, compared to some of the other players in this space, we've got expense ratios over 1%, 0.5%, 0.8%, 0.5%, and 0.35%. So VXUS can still be an attractive option for you if, again, you want broad diversification, exposure to 8,600 international companies, and to have to pay a very, very minimal expense ratio to receive that level of diversification. I'm going to switch this charting here from price return to total return. And again, this is VXUS compared to the peers above. Looking at the 5-year chart for total return, they're all fairly similar. You do have this IPKW standing out from the rest at 140% total return. We've got VXUS coming in at 80% total return. Just for kicks here, I am going to include, let's say, BTI, which would be the total US stock market. So several thousand US companies of all market caps. We'll keep the total return charting and look at the 10-year. And yeah, you see the outperformance of the US market here. So for VTI, total return of 207% compared to 67% for VXUS. Obviously not a fair comparison as they are tracking completely different indexes. So just wanted to run through this ETF real quick. Got paid the dividend less than I was expecting. Wanted you to know why. Wanted you to know that it's not abnormal and it's something that you can continue to expect holding VXUS. Thank you for watching. Like and subscribe. Take care. Speak again soon. Bye-bye.